All right, in today's video, what I want to talk about is the difference between Maneosians and Super-Maneosians. So it's a valuation metric that I devised. And let's go right over here and we'll just go through the definitions. Here we go. Okay. So a Maneosian is defined as where the ratio of the price to earnings and the dividend yield percentage is equal to or less than 2. And so the example here, price to earnings is 6, dividend yield is 4%. So the ratio between those two is 1.5. Now, a Super-Maneosian is where the dividend yield is greater than or equal to the price to earnings. So the example, price to earnings is 4, dividend yield is 6. So why did I create these valuation metrics? What this tells me with both Maneosians and Super-Maneosians is that a stock is completely hated and no one wants to own it because it's paying a great dividend and its price to earnings is low. So those ratios are similar. When those ratios get close to each other, something's going on. There's a big sell-off. It's in a sector that no one wants. Perhaps it's tobacco or coal or whatever sector at that moment in time is hated. And so let's go now to Guru Focus, which is one of, as I mentioned in another video, there's a couple websites that I really use as far as the fundamental element of my investing, the value investing. I use Guru Focus and I use Zacks. I use a lot of the screens on Guru Focus. There's another software that I'm really intrigued about. I'll probably end up purchasing it fairly soon. It's called Fast Graphs by another Seeking Alpha writer. I think his name is Chuck Carnevale. So that's something also that looks quite interesting for fundamental Graham Dodd value type investing. But let's take a look here just to give you a couple examples of Maneosians, Super-Maneosians. So some of you have noticed that I own a lot of the Chinese banks, the big 4 state-owned and China merchants. So you can see here, Industrial and Commercial Bank of China right here, okay? Its dividend yield is greater than its price to earnings. So that would be a Super-Maneosian. You can see that there. We go down to China Construction Bank, same thing, another Super-Maneosian. And obviously, a lot of people with what's going on in China, there's hesitation to own China, geopolitical reasons, they're cracking down on different businesses. I think there's less risk that they would crack down on banks because they're state-owned. These are the state-owned banks. So it's not like Alibaba where, they're trying to maybe punish a capitalist and show who's in charge, so on and so forth. These are the state-owned banks. But they're just basically hated. No one wants to own them. So I own them. I just collected, beautiful dividends from them recently. Let's just go down here and find, let's scroll. Okay. This is a perfect example of a Maneosian, not a Super-Maneosian, but a Maneosian. So Sber Bank of Russia, which I also own, big Russian bank, kind of like their Bank of America, their JP Morgan. Its dividend yield is 5.66 and its price to earnings ratio is 7.07. So if you take 7.07 divided by 5.66, you get a ratio of 1.24. Okay. So it's definitely above that threshold of a Maneosian. And again, it doesn't mean that you necessarily want to own every single Super-Maneosian or Maneosian. It's just that as a value investor, as a contrarian investor, as a type of Graham Dodd type investor, if you're not investing in things like Tesla and Palantir and Cathie Wood and looking more to like the growth technology sector, but you're looking as that contrarian, this is at least a metric to look at. So let's look at Gazprom. I also own Gazprom. This might be just out of the realm of a Maneosian. Gazprom's price to earnings is 9.95. Its dividend yield is 4.25. So yeah, it's just out of the realm of a Maneosian 2.34. So let's just kind of scroll through the list here. You can just see some, again, you have tobacco, you have Russia, China, you have things that people, you have a Chinese, looks like a Chinese coal company here, CUAEF. You might have some steel, different companies here. So yeah, it's just an interesting list. Oh, this is another company I own, Norilsk Nickel. So you see here, its PE is 7, its dividend is 6.79. So its ratio is almost 1-to-1, 1.03. So very, very close. That's another, again, nickel mining, coal, Russia, China. So yeah, it's just something that, to me, no one wants these. They're like the discarded stocks in the market. So yeah, so that's just a strategy I personally developed, I utilize. And so one of the things I look for is patterns and commonalities. So let's say I run through some value screens on Zacks and on Guru Focus, and I see that there's some of these Maneosians, Super-Maneosians in those value screens. It'll also, okay, it's showing up as a Maneosian, showing up in Zacks value screens, showing up in Guru Focus. And this is interesting to me. So yeah, that's pretty much it for today. Just a quick little video on the definition of the Maneosians, Super-Maneosians. Also just crossed 100 subscribers, so happy about that. I think I started just a month ago with maybe in the 50s or 70s, so just crossed that 100. So thanks for all the subscribes, and any questions, feel free to reach out. Take care. Ciao.